everyone, a very good evening. You're watching The Money Show on ET Now. I'm Mubina Kapasi. Let's tell you what we have lined up on today's episode of the show. If you've been reading the news lately, it's all about, and it's more specifically for borrowers. These are the people who have taken loans, may have had some difficulty in repaying these loans. Then you had the government saying that, look, we'll give you a moratorium, a holiday from paying your EMIs for a bit until you're able to regroup your finances, and then you get back to servicing your EMIs. But there are two categories of people. One is those individuals who have not really opted for the EMI moratorium. So for those people, there is a benefit, and even for those who have opted for the moratorium, you can expect a cash back. The entire interest on interest or compound interest element is now out of the picture, as now you can essentially expect a cash back of any difference that you may have paid. So today is the last day, by the way. There's an update as well from the courts. This entire matter is under the Supreme Court hearing currently. But yeah, we should sort of be hearing on that very soon. But in the meantime, what can you expect? What's the line of communication you should establish with your banker is what we'll be discussing on today's episode of The Money Show. Later on, we'll also be bringing on board our ICICI Prudential ETF Corner, a very interesting topic to discuss. And finally, ahead of Diwali, ahead of the festive seasons, gold schemes offered by jewelry companies. Should you opt for those? Are personal finance experts a fan of those schemes? That's what we'll be discussing on our Spend with CMS segment. So without any further ado, let me bring on board our very first guest. It's Aparna Ramachandra, who joins in from Rectify Credit. Aparna, thanks so much for joining in on The Money Show. So to start with, for our viewers who may be unfamiliar with this cash back that the government has asked banks to give borrowers, and I speak specifically for the borrowers in the last who at least have borrowed money in the last 1 year, because they are the ones who the moratorium applies to. What exactly is this scheme? What can, borrowers expect from the banks?
Hi, Mubina. It's always a pleasure to talk to you. See, today, as you are aware, November 5th was the last date. So I think the borrowers should be expecting a credit into their accounts on their own. And the mandate has been, the information has been very clear that one need not apply for this. This is going to be an auto credit, sorry. So this is irrespective of whether somebody opted for a moratorium or they didn't opt for a moratorium. Both of them are eligible for this cashback.
All right. And what's the cashback essentially one can expect into their loan accounts?
Talking about is, like you rightly said, interest on interest. So the compound interest and the simple interest, the difference between the two is what is going to be credited. Say, for example, now somebody had taken a 50 lakh home loan at 8%, and 48 lakh was what was outstanding on that loan. So a compounded interest works out to about 1 lakh 95 for that 6-month period, and a simple interest calculates to about 1 lakh 92. So you can expect something difference between that 1 lakh 95 change and 1 lakh 92,000. So somewhere around 3,200 is what is going to be expected. Now, we don't know about the income tax repercussion, the GST or any other taxes deducted. That part is still not clear. But as of now, the notification is the difference between the compound and the simple interest calculated for these 6 months of moratorium is what is going to be credited into the borrower's account.
All right. So it's a simple calculation. During the moratorium, you were asked to pay interest on a compounded basis, which means there's interest and then there's interest on that interest as well, which you were liable to pay during the moratorium. But now the court has said that, look, charge it on a simple interest basis. And you know what? Even for those individuals who did not opt for the moratorium, they paid their EMIs, you are actually charged on a compounded basis. So the government said that, look, why penalize them? So put them as well on, an equal footing. So you give them the difference between compound interest and simple interest. And, Aparna explained it with a very nice example. Let's assume you have a 48 lakh rupee loan outstanding on which there's 8% interest. So I mean, roughly for those 6 months, the 6 months of the moratorium, it roughly comes to around 3,200 odd rupees. So don't expect some, mega cash back or roll back into your accounts. It's going to be something small because, the difference between credit and simple interest for a period of 6 months is, not that substantial. Of course, if your loan amount is big, then that will be big as well. Now, Aparna, we understand for for home loans, for car loans, etc., this is the calculation, relatively simple. What happens in terms of credit card loans?
Yeah, see, for the credit card, what they have clearly told is, now to answer this question, I will go one step behind, before this. A credit card company is free to charge a rate of interest which is not decided by RBI. Home loan and other loans are kind of, there's a band within which the banks need to charge for these loans. But credit card is something that the lending companies have a freedom to charge. So there is no RBI regulation on that. But however, now what they are saying is weighted average lending rate is what they are going to be taking for the credit card. So they will not give you a 48% or 38% kind of a thing and then calculate the compound and simple interest and give you the difference, because that amount obviously will be much higher. So they are going to take this weighted average lending rate, so which may be very similar to your personal loan kind of rate range. So basis that is where they will calculate the compound interest, simple interest, and give you the difference.
Okay, so something called as a weighted average lending rate that will be charged by the credit card issuer for transactions financed on EMI basis from all the credit card borrowers. This again for the moratorium period, 1st March to 31st of August. And now this interest rate can be much lower than the rate your bank charges on the credit card overdue as well. Usually it's at 4% per month. This will definitely be lower than that. So now, Aparna, another interesting question that we are asked very often is, how will this moratorium, if I have opted for this moratorium, how has it, sort of impacted individuals' credit scores? Would it sort of affect their lending ability in the future, borrowing ability in the future, pardon me?
See, RBI, when it issued this moratorium notice, very categorically had said in no mean words that moratorium should not be held against the borrower. So it was very clear that these borrowers, whoever opted for a moratorium, let it be individuals or corporates, SMEs, that they were not supposed to be charged, told about, informed to the bureau as either defaulters or made late payment or any of that. They had to be reported as normal borrowers, which means their credit profile was not going to be hurt. And in these 6 months, no collection calls and, all of that was also very clearly instructed that borrowers should not be bothered with. So to answer your question, there is going to be no adverse effect. But what I foresee now is after this whole moratorium ends, this cashback happens, when the borrower goes back for new loan, bankers may take a little more cautious look as far as these kind of borrowers are concerned, because they are, nervous about the piling NPS.
I just want to bring on board one more point with respect to the entire credit that borrowers should expect in their bank account. Let's assume, and there has been a case where still a lot of banks have yet not spoken to their, their customer about the same. Many viewers may not have heard from their bank about this. So, do you recommend they contact the bank directly? Should they wait? Is there anything, any communication from the courts with respect to that?
Court has the government has told the court that no borrower need to contact the bank, because this is going to be irrespective of, whether you opted for a moratorium or you didn't opt for a moratorium, you didn't pay even for people who close their loans in this interim period. For example, if I had closed a loan in the month of June, so the moratorium started from March. So they will give me this March to June also, they will calculate this difference and credit me that cashback. So instead of 6 months, they will calculate 3 months for me and give me that 3 month also credit. So the writing is very clear on the wall that the borrower need not contact the bank. Having said that, if nothing is coming till another week or so, I would advise borrowers to communicate to the bank to inform that no such credit has come, to figure out why it has not come. Maybe there is some other issue, because substandard accounts that have turned NPA do not qualify for this cashback. The account had to be standard as on February 20th. Only then this cashback is that account is eligible for this cashback. So if you don't receive, write to your lender to figure out why you have not received, to find out if there was any other issue. Otherwise, this is an auto credit that is going to happen.
Okay, so actually if you've not received, then there could be a reason why. You may have not fit certain parameters or something like that. So it's important that you talk to your bank and approach them that, listen, is there some issue with my account? Especially if you've been servicing your EMIs properly, of course, that's the precondition. As on up till March 2020, you should have properly been servicing your EMIs. If you had not, then you should not expect this credit. It's extremely important to understand that. You know what, Aparna, we'll do one thing. We'll just take a very short break. So I'll request you to stay on with us. Meanwhile, folks, if you have any questions about this entire bit on how it works, you can write in to us on the Money Show at etnow.tv. I'll repeat it once again, the Money Show at etnow.tv. We'll be back after a break. Welcome back. You're watching The Money Show on ET Now. We're in conversation with Aparna Ramachandra talking about the fact that a lot of you should be expecting a credit in your bank accounts. The credit will be, totaling the difference between compound interest and simple interest on your loan for the period March to August. Okay, now, we've all come out from a pandemic. Things have been tough for a lot of us. They may be a little more tougher going forward as well. Aparna, many people, and at this point of time, the data does not suggest a lot, but some people may have decided to go to the bank and ask for, recasting their loan, restructuring their loan. What implication does this have for one's credit score? And again, their future borrowing ability?
If you ask me, that is a more positive step, because you are going and talking to the borrower with an intent that you don't want to default. So you're telling your borrower, I don't want to default, help me, sort me out, right? So that is a more positive, proactive action a borrower can take rather than choosing to not pay because cash flows are stressed. Now, if you have observed even in this moratorium period, especially after the first 3 months, most of the banks on their own increase the loan tenure by 2 years. And by then, the interest rates generally had also fallen. So in real terms, your EMIs have fallen compared to your pre-March EMIs. But if you still have issues paying even that bit, you can always go back to your borrower if rest of it is in order. When I say rest of it, what I mean is your income level, your ability to earn more for the next whatever years, age is on your side, you have a co-borrower, and rest of that is fine. Then you are better off increasing the tenure further so that your cash flows are not stressed, and continue to pay these EMIs on time. And as things improve, you can always pre-close the loan. So there is no issue on that. But going and talking to your lender to figure out what are your best options so that you don't end up defaulting is the most positive and proactive step a borrower can take now. And the banker is also aware that, things are not too rosy for everybody.
the fact that you're being upfront with your bank and telling them that, look, you do have every intention to pay, but because of the kind of situation we are in, things are a little difficult. That in itself is a positive, and that's I guess in a way it's better than you defaulting on the loan, and I guess that's something that the bankers as well appreciate, that we are in the midst of a tough macroeconomic environment. Aparna, at this point of time, interest rates are extremely low. They are at multi-year lows. Do you advise, our viewers, if any of them are in, an MCLR regime or, a fixed rate regime? Very few of them has been a fixed rate. But yeah, would you advise that they consider switching over or refinancing their loan?
That's the ideal situation. I mean, if somebody is there at a fixed rate, now of course the floating, as you said, they're at historical lows, so it is a good thing to shift. But at the same time, figure out first which bank is willing to lend you. Do that homework, and only then say yes to that switching. Because today what is happening is a lot of banks are not ready to take on new customers. When I say new customers, with whom they have not had a relationship with, a complete new borrower, the bank is a little varied. They are preferring to use the existing database, say for example, I already have a personal loan with HDFC, and I am wanting to shift my home loan from elsewhere into HDFC. HDFC is more than willing to do that, because they need not do the KYC. They know me already. They have my other details with them, so they are happy doing that. But if I walk into a complete new Axis Bank where I have no relationship, I have no savings, no salary account, no other loans going, then it is a little touch and go kind of a call. So do that homework first and then decide to shift. And even there, the quantum of the loan, there is a difference in the interest rate. So please do that homework and then do the shifting decision. But it's a good advice to shift now, because the rates are really low.
But would you be concerned, Aparna, about... And by the way, yes, a lot of banks, as a part of their festive offers, have said 100% off on processing fees and what have you. So all the more, do you think that those costs that are, that do sort of come along with refinancing would be to their bare minimum currently?
Currently, yes, because a lot of them are wanting to woo their customers. Even existing bank where you already have a loan, if you go and talk to them saying that, can you reduce my EMI or, rework and all of that, banks are willing to walk that extra mile with you because they don't want to lose a customer. Now, one is if you already have an existing relationship, like going back to my earlier example, if I already am a personal loan borrower and if I'm asking to shift a loan from elsewhere, this bank is not going to charge this processing fee and, all those other frills that were normally charged, and they're willing to do that transfer at a more convenient manner. And today, again, because of this whole pandemic, social distancing, nobody is expecting you to walk into the branch. So they are very happy to accept your digital verification and stuff like that.
Great. Aparna, it was lovely speaking with you. Thanks so much for joining us today on ET Now and talking to us about this credit that a lot of borrowers should receive. A small amount, but nevertheless, and I'm sure it comes in as a much needed relief. Whenever you see any sort of credit action in your account, I'm sure it makes all of you all pretty pleased. Thank you, Aparna, for that. We'll take a very short break. Don't go anywhere.